How's it going, everyone? Matt, Leighton, Shawn Battle. Welcome back to another real estate video. This video is going to be about the worst mistakes you can make when you are buying a house or in the process of buying a house. So if you're unsure about credit or you're thinking about doing something with your credit, don't watch this quick video, and we're gonna go through the top mistakes people make with credit when buying a house. Shawn, what's going on, man?
Man, it's good. Everything's good. You know, real estate market, pretty good. What's up?
So get this, I just put a property under contract as the buyer's agent, fist pound, and I got a call from an agent and they said, hey, will your client accept another offer? You know, you're at this amount, let's say 300,000, will they take 310? And I'm like, what are you talking about? And she's like, you're listing the property that you just put under contract. And I'm like, I'm the buyer's agent. She's like, no, you're not, you're the seller's agent. Some agent called me and tried to convince me to get out of the contract that my buyer put under contract because she thought I was the listing agent.
Wow.
And she's like, no, you're the list. And then she's like trying to correct me.
She went back in and looked and was like, ooh,
yeah.
That's the reason.
I'm like, are you gonna go call the listing agent now to convince them to break this deal?
And that's another thing is like, when we put the buyer's agent in right away before all contingencies are gone, it's kind of a scary thing because like people can call anybody then and just get all the information from that buyer's agent. So but that's crazy. I've never heard of that before.
This is the circumstance where I actually like knowing that information, and if you're a seller, there's not that many ways to back out of the contract. The seller can't unilaterally void the contract, so as a buyer's agent, we're still like in good footing. They can't just back out because they get some phone call. Right,
but now they have that footing, like if you try to back out for anything on the home inspection or anything like that, you've got a lot less ability to negotiate.
That's right.
They'll just be like, we'll take this other offer for 10 grand more.
Yeah.
Scary, man. This is the market we're in. People are trying to do whatever they can to get into these properties.
Snakes in the grass. I might do the same thing where say, hey, listen, I have a backup offer.
Yeah. So I mean, you got to use those.
All right, got my handy dandy notebook. The top mistakes. Guys, thanks for watching this video. Thanks for following along on Instagram, Facebook, YouTube. Top mistakes you can make when you're buying a house, when you're in the process of buying a house. Mistake number one, closing out old accounts. Now, some of you may know this already, but this recently happened to me, kind of. I'm acquiring more credit cards because I want a $1 million credit line. That's just what I want. Yo, if you laugh, like if I set a goal and someone laughs about it, like that's how you know your goal is high enough.
$1 million
when people
bucks,
just
baby.
like laugh in your face about it. So my first credit card ever was an LL Bean credit card. Huge mistake, but I got a really good deal on underwear, so I was like, you know, hey, 3% cash back. So I was like, all right, well, why don't I just close out this very old account since I don't use it? No, do not close out that account, because the way part of your score is calculated is the age, the history of your old account. So that account is, you know, 10 years old or something, and if I were to close that out, then all the creditors would see my account average age decrease significantly. So what I've ended up doing is moved I maybe had like 5 monthly payments on there. I moved all of them off except for like one of like a $199 charge. So I'm keeping it active, so the age is there, but I'm not using it, and I'm absolutely not closing it out. Definitely don't close out old accounts.
Right. One thing that they'll tell you is to keep things going. If I'm talking over your points, let me know. But old accounts, it goes against what you would think, right? Oh, I'm going to close my accounts because I don't want too many accounts, because I don't want the credit bureaus to think that I have too much out there. But it's the opposite.
Right.
If you can show that you've got a lot out there that you've been responsible with, and for a long period of time, it's going to increase your credit score.
Yeah, and if you close out your accounts, then your credit utilization will go up. So if you had $20,000 worth of credit and you close out a $1,000 account, well, now it's going to see that you only have $19,000 worth of credit. So that account utilization is going to go up, and you definitely don't want that. Okay, number two is taking out a personal loan to pay off a high interest credit card. I literally had this come up with one of my buyers where they got a letter in the mail, you know, soliciting, and it was like, here's your credit line that you've been pre-approved for. and they went through with it, and they got this $9,000 personal loan about 2 weeks before we ended up settling. And I'm like, what are you doing? You are taking out a personal loan that's going to be affecting your credit score, your utilization rate, and when the lender goes back to run your credit, to pull your credit, like, what is it, a week before closing or something like that, they're going to see that, and that may significantly affect whether you're going to be approved or denied for that loan.
Yeah, I've had people do some crazy things right before closing. You do not want to, so when you do an application with a lender, they're looking at your credit. They're going to pull that credit again before you go to closing.
Right.
They can deny you financing based on that. I mean, and it changes, I'll go over it next, but it changes your interest rate too. Not only could it just blow you out and not get approval, but it's going to change your interest rate and then make your payments go up.
Yeah, because if you're pulling credit reports and getting new accounts and whatnot, you may be on the fringe of one interest rate because your credit score is a certain number, but if you start opening up new accounts and messing with your credit, well, that may bump you down to the next tier down, which could negatively impact the rate and the loan that you were going to get.
Do you want to talk about tiers?
Jump in.
So if you are at a 760 and above credit score, you're considered A paper. So you're going to get the best loans at that point. Lower interest rates, lower closing costs because you're considered responsible. You can pay your debts and you pay them on time. You don't have any lates. If you're below 760 to 720 or even 700, that's going to be a different tier. Maybe you're B, right? And you're going to get a slightly higher rate. So it might be from 4% to 4 1/8 or 4% to 4 1/4. I've seen that jump. It's really just going to depend. There's so many programs out there, so many investors that are willing to do different things. So you really have to check with lenders on that. But the goal here is to get you above a 760. 760 is going to get you everything you need. The lowest credit score that you need to really think about buying is 580. And 580 is low.
Yeah.
And you're going to be struggling. You're going to get these really high interest rates. I mean, the affordability of a property between, a 2 to 3% increase in rate is ridiculous.
Yeah.
So really what you want to do is work on your credit before you buy a house. Get that credit score up. If you can get it from the 580, and this can happen pretty quickly. If you work with lenders to say, hey, do an application and say, I'm going to work on getting this credit score up, there are things that they're going to tell you to do to improve it quickly.
Yeah,
right?
and that's a great segue into our next point. Let's talk about the 580 credit score, because let's face it, if your credit score is 580, there might be some delinquent accounts or you might have some high balances. So the next mistake is not talking with your lender before you begin to pay off that debt, because you want to have a game plan moving forward. Because if you have $3,000 on a high balance account, is it worth it to pay off the $3,000 immediately, or will that affect your purchasing power where that $3,000 could have gone to a down payment? So you want to make sure you have a game plan to attack your debt. So if you're about to get this huge mortgage, before you pay off all these accounts, which I'm a big proponent of paying off all the accounts, but have a game plan with your lender before you just go and willy-nilly just start paying off all your accounts.
Right, and one thing that they're going to tell you, if you have a credit card of $5,000 balance, like your limit is $5,000, what you should never do is max that credit card out.
Right.
You should always keep that balance lower than half. So $5,000, don't spend over $2,500. Don't have that rolling balance go over $2,500. That's going to keep your credit good.
Yeah.
The thing I do is pay off my credit cards every month.
Yeah.
I never have a balance, and that just shows that you're paying everything. But really, one good thing to kind of start a credit is like your cell phone bill, right? Open a credit card. If you have really bad credit, try to get a credit card and do one thing. You have one bill, go to that credit card, and you have it automatically paid out of an account every month. So you're not even paying it, it's just automatically paid every month, $150, and it's just showing this ability to pay every month, and sooner or later your credit score is going to go up. So if you've got really bad credit, you've gone through some personal difficulties, just do that. Start with that.
Definitely. You definitely don't want to max out. Shawn says stay below 50. I like to stay below 30 at least. And one thing you can do is if you do start to have high balances, but you have the money to pay it, don't wait until the statement comes out, because when the statement comes out, it'll be like, all right, well, you use 50%, and then that's going to be shown on your credit report of like, okay, Experian, TransUnion is going to show 50%, but if you pay off some of your debt before it goes to the statement, it'll show a much lower utilization rate. So definitely don't max out your credit cards. The next mistake is opening up too many accounts, okay? So if you go under contract, don't open up any more accounts, right? Now is not the time to find your Chase Sapphire Reserve and start planning your vacation and get all these points. Basically, the rule of thumb is don't touch your credit once you're under contract.
Yes, and don't try to get the free t-shirt for opening up a credit card. You know, that's one mistake that a lot of young people make. You know, they're at the beach and they, hey, open, you ever see that? Like, sign up for this credit card, you get a free like water bottle or whatever.
At the register.
And you know, your rate is some ridiculous amount. You've got to be choosy. And that's one thing on one side, but after you go under contract, or if you're really close to buying real estate, don't do anything. Don't touch it, because we'll go into your next thing, because I have something to talk about.
Yeah, the slightest thing could affect it. I'm gonna roll down the list here. The next thing is co-signing on a loan. So if you have kids, if you have a business partner, if you have a buddy that you would co-sign for, I don't know why you would ever want to do that, but signing up for more credit when you're under contract is a terrible mistake. The reason we're saying, you might be like, oh yeah, of course, no one's going to do that. Well, people do it. That's why we have to talk about it and start from square one to let you know not to co-sign for another loan. It does affect, and it will show up on your credit report.
It happens all the time, and there's so many things. So I actually had somebody earlier in my career co-signed on a car for somebody, and she was so close. I mean, I was going to classes with her to try to get her credit up. And then she does this. And it was just, all right, we're done. You know, it's over. So co-signing on a car to help somebody, this is not the time to do it. I mean, and what was one of the other points you said?
So the next one we haven't talked about yet is not looking at your credit report. So as you may or may not know, you can get a free credit report once a year, I believe, and it'll go through all your accounts. You never know, there might be a negative remark or a delinquent account on there, maybe an old cell phone bill, maybe like a Best Buy purchase from 2005. Like, you never know what will be on there. So you have the opportunity to get this free report, and you want to make sure to look through it to make sure everything's kosher, your roommate hasn't used your social for any purchases, just to make sure, because if your credit scores, you know, on the threshold of 580 or 699 or whatnot, you have the opportunity for a free credit report. Definitely take advantage of that.
Yeah, there's always things that can be showing on there that you have no idea about. I mean, it happens all the time as well. You get your credit and they're like, oh, well, you have this 30-day late or this 60-day late payment, or you have this old credit card that you thought was paid off, that you paid off, that's still sitting there and it's accruing interest. And, you know, a lot of times that can be just taken away very quickly. If a lender sees it, they'll contact that person and erase it for you.
Right.
Another thing is that I've seen happen a lot of times is people get excited about their new house and then they start spending a lot on their credit cards on furniture before the purchase. Oh, well, it's not going to be here for this amount of time. If you're really close on being approved, the lender is looking at your ratios, right? Your debt to income ratios. If you're very close on those debt to income ratios and then you go spend 10 grand on new furniture, you're gonna push yourself out of qualification. If you've already waived that finance contingency, you're gonna be in default. Anything that changes, if you do anything to your credit, you're in default of the contract if that's gone.
No major purchases until after closing. One more thing about talking with your lender. Some lenders may have programs where you're actually able to use part of the loan to pay off some credit card debt. So that's another advantage. Guys, you can't do this on your own. You need a lender, you need a real estate agent to tell you the best ways to combat your debt history. I mean, you can try to, you know, be the lone wolf on this, but everyone here is here to help you. And what we're trying to do is give our expertise, give you options, and then ultimately you're gonna choose the best option. Is it better to pay off your debt first and then get a loan? Is it better to do half the debt and then, you know, maybe a slightly higher interest rate? It's all going to depend. Our goal here is to share the mistakes with you, let you know what to avoid them, and then you can take that information and then use it yourself.
Yeah, and a lot of lenders are going to need reserves as well. So think about that. If you've got a lot of cash, but you've got some credit, and you're using all that cash to pay off these credit cards, that drops your reserves. That could push you out of qualification as well. So they need, like a lot of times, they'll need 6 months of reserves that 6 months of your mortgage in reserves after you close in order to do the loan. So there's a lot of stipulations. We have a lot of great lenders that we deal with, we work with every day. So if you guys need any advice, we have the lenders. Right?
Definitely. And if you had any other questions about credit, be sure to drop them in the comment section below, and either Shawn or myself will respond to it. Cool. You got anything else?
That's it, man.
All right, guys, there you have it. The biggest credit mistakes that people make when they buy a house. Hope you liked this video. If you did, be sure to hit the thumbs up button, and we'll see you in the next one. For Shawn and myself, thank you very much for watching.
Thanks.